Auto insurers are racking up bigger profits than ever before. This is according to an independent research organization report that made its way to me by way of the New York State Trial Lawyers Association. It's an organization in which I've been a member for some time. They are a champion of personal injury issues for those who have been victimized by the negligence of others. But the numbers that I read out of this report are pretty remarkable, and I'm sure most of it may not come as a surprise to you, but let me go through some of the information that was shared in that report. Since 2005, so a little more than 20 years now, the number of claims denied by insurance companies that are just flat out denials, zero payments, has increased by 44%. So that's a huge bump in 20 years. Which companies are the worst offenders, right? You might be wanting to know this. Allstate, they closed 55.5% of their personal injury claims last year with no payment, zero. Progressive has two of its subsidiaries that closed 47.4% of their personal injury claims with no payment. Those are staggering numbers. Those are shareholder-driven companies. So what does that mean in plain English? They're driven by profits and growth. On the lower end of the numbers was actually New York Central Mutual, and that mutual means something. A mutual insurance company is owned by its policyholders, not shareholders. And the days of the mutual insurance companies are kind of fading faster and faster. Mutual insurance companies are generally a little more stable. They're not profit driven. They actually return profits to their policyholders or their owners by way of reduced premiums or even dividend payments. But let's be real. Like the companies you see advertising on TV and online are who? Allstate, Progressive, State Farm. Those are all publicly owned, shareholder-driven companies, fundamentally driven by profit and growth. Why is that important, right? Well, you pay your premiums in advance, and then those companies take those premiums and then they invest them. That's how they make income. In addition to the premiums that you pay them, they make more money on top of that by taking those premiums and investing them. And how do they hold on to those profits? Guess what? They pay out as few claims as possible. Surprise, right? Of course, none of this is a surprise. Naturally, the report cites how the insurance companies point to anti-fraud measures, abusive litigation, personal injury lawyers, drumming up lawsuits. I mean, the same common refrains that we've heard for years and years. This isn't a surprise at all. But one thing you as a consumer, as a driver and owner of automobiles can do to protect yourself is to shop around, right? How can you shop around? I know more and more people are doing their auto insurance shopping by just looking online and doing their business and making their decisions without the benefit of speaking to an agent or a broker. And there's a difference between those titles, which I'll discuss in just a moment. I always tell people it's still preferable to talk to an actual agent or broker because you might be overlooking important gaps in coverage. We've talked about some of these coverages a couple of times now in past videos. I'm not going to get into that topic today, but a DIY effort to auto insurance may not give you the coverage and the protection that you think it does. If you own a business, if you own a home, if you own multiple homes, or if you're a landlord, I would strongly encourage you to talk or meet with a broker and agent to make sure that all the coverages you need are in place. And they can also shop the best rates. Now, brokers might be able to do a better job of that, generally speaking, than agents. What's the difference between an agent and a broker? An agent is captive to the company they work for. So think State Farm, think Allstate. I don't believe Geico. I've never seen a Geico bricks and mortar office with their agents. There may be some elsewhere, but I've just never seen one. But State Farm is prolific. Allstate still has brick and mortar locations. You can still get good deals if you bundle coverages and so forth through agents, but they're limited to only providing you listings, or excuse me, quotes for coverage available through their company by which they are employed. Independent insurance brokers, however, can shop your rates and shop for you amongst a host of different companies. It's true some brokers may have affiliations or stronger relationships with certain companies versus others, but they still have the ability to shop your rates and shop your business around among different companies. So one way you can protect yourself against these flat out denials or these aggressive insurance companies who might just be interested in maintaining corporate profits at the expense of their policyholders is to shop around and look for the best rates possible.